Hey traders, it's Asim Trading here. So today I wanted to go over a little bit about how you should go about studying the market. It's important to study the market for several reasons. One, you learn about the recurring patterns that have happened over time. Uh, if you read O'Neill's How to Make Money in Stocks, which is what I have up here on the right side, you you start to understand that some of these massive movers, they have a lot of characteristics in common. And O'Neill was one of the first people, at least in modern times, to popularize that concept with his book. And in the first 100 pages of his book, he goes over many of the biggest winning stocks over the last century or more. So I mean that's a great place to start. It helps you understand what does a big winning stock look like and what are its characteristics. And as you go through this book, whether you have a PDF or whether you have the handheld book, I have both actually. You can go through these charts and you can understand, what are the characteristics of some of the biggest winning stocks. How do the market corrections have an impact on the bases that are built? What do the moving averages look like? What do the price bars look like? I remember dissecting these charts over and over and over again, just trying to learn and understand, what does a big winning stock look like. A lot of these stocks are super old. A lot of charting packages, they don't go back past, 10 or 15 years sometimes. So in some ways, this is all you really have for reference is to look at these charts and to try to, hope that you can go back that far and actually study the price action during that time period. So this is a really great way to kind of understand and build off of your understanding of what a big winning stock looks like on its way up and kind of the market conditions. And O'Neill in this book, he goes over the fundamentals and all those things that the characteristics of the biggest winning stocks. um, Another person who's recommended a similar sort of study is Christian Kulamagi. Anybody who's a follower of him knows that he recommends going back through uh, as far back as you can go in TC2000 or some other trading platform and just studying the biggest moves that you can find. So I'm going to show you how I go about doing that. I do this quite often actually because it helps reinforce the things that I'm trying to do in the market. It helps me tweak and understand my own setups a little better. It helps me make sure that I'm scanning for the right sorts of situations and that I'm identifying these things in near real time, because it's one thing to look at a book from moves that happened 20, 30, 40, 50 years ago. It's great to study those and get an idea, but the real challenge is how do you identify those things uh, before they've moved 1,000%. How do you find them when they've only moved up 50 or 100%? How do you find them when they're in the early stages of breaking out of their bases? So learning to do those things is great because it helps you to tweak your own scans. It helps you to challenge your own biases. If you do this study regularly, then it helps you understand, regardless of what you hope, wish, or dream, like these are the technical characteristics of these stocks as they're making their way higher. So, I'm going to go over TC2000. I mean, there's other ways to do this. You can use TradingView. There's other platforms that you can use this with. I'm going to use TC2000 because that's my preferred platform of choice. But I'm sure you could do something similar with other platforms. But TC2000, one of the limitations is you can only go back so far with the price history. I think if you have a platinum subscription, maybe you can go back further, but I just have gold with real time. But even if I just take this first stock here that's in O'Neill's book, Mosaic, so one thing you'll notice if you scroll back far enough, um, this massive move here in 2007 corresponds with this move here in 2007. So one thing I really like about ADX, I know I talk about ADX a lot, but there's a reason for that. Is as I studied these sort of moves over and over and over again, I started to realize these power trends that Dr. Schaap talks about, and like kind of the impetus of his book AD Excellence, these power trends, these are very evident on these charts. Like when you scroll out far enough, you can see like all of these periods of time where the ADX is far above the 25 baseline, and the green is above red. Like these are what are considered power trends. And you can also identify these areas where it's just like kind of nothingness. And these are the areas where, for all intents and purposes, you could chop yourself to pieces, trying to jump on something that's just not there. You're like making something out of nothing. Whereas, when you kind of isolate these power trend areas, you can study the characteristics of those, and you can kind of make sure that, that you're seeing something that's actually there and you're not just making it up. So one way I go about studying the market is I go back during these kind of power trend periods. And like again, this is kind of a zoomed up version of that. You can see very clearly that this yellow ADX line is far above 25. And every now and then the green will dip below 25, but you can see that it's pretty consistently showing a powerful trend to the upside. And, you don't, even if you don't use the ADX, you can look at other characteristics of just trend. You'll see higher lows. This is a weekly chart, so just keep that in mind. So weekly chart, you can see the higher lows continuously being built, all the way up as it stair steps higher. If you use the 10 and 20 moving average, they're sloping up. The 10 stays above the 20 the entire run, and then you'll get these brief pullbacks to the 10, 20, almost like it's skipping along, or as Christian calls, surfing the moving averages. And this is a characteristic you'll notice with just about every power trend, is the 10 over the 20, both of them are sloping higher, and it does that consistently for the majority, if not all, of that power trend. Another thing you'll notice, if you pay enough attention to the bars, is notice the interplay between the up and down bars. So when you see a red week, these red weeks are quickly that's a sign of actually strong demand, is whenever you don't have 2 or 3 or 4 red bars in a row. You'll have a red bar and then it immediately snaps up to green. Or you'll have like these really low volatility pause bars. You can see throughout this entire uptrend, it only had 2 weeks at the most at any point in time that it was down. Usually it was 1 week and then it was a pause week, or it was, one down, one up. And like every now and then you would have this period of time here where, there was 2 down, but then it snapped up, and you could see how sharply it snapped back up on that, and then 2 down, and then it just takes off again. So you can see that the downtrends are very short-lived. The demand is strong. So like as soon as the thing starts to sell off, the shares get snapped up by the institutions and other folks that are buying this stock as it's moving higher. And then once the trend kind of weakens and exhausts itself, you kind of see the opposite playing out. You'll see 1, 2, 3 bars red in a row, and then like there's kind of this bottoming tail bar where it looks like people are trying to step in, but then you immediately get hit with more selling, and then you can just see it kind of falls apart from there. It never really gains steam again. And then you kind of have the opposite effect where you're having higher lows. So basically the opposite of what makes a good uptrend, you start seeing that proliferate in the downtrend. The moving averages start rolling over and sloping down. When it comes to the ADX, you start having the opposite. So where this was a power trend to the upside, this is actually showing a power trend to the downside. So, so this is just one example, but like if you study stock after stock after stock, and, we can actually look at a different trend, so this is another period of time here. So I just fast forwarded a little bit on the chart, went to another kind of power trend zone. And you kind of notice the same characteristics. The 10 and the 20 are sloping up. You have these very shallow pullbacks. You have this stair stepping higher all the way up. And then whenever the trend finally rolls over, you'll kind of get the same effect where this power trend kind of exhausts itself. It kind of recedes back below the baseline, and then it just kind of really doesn't ever get back to where it was before. You skip forward, find another spot, and there's going to be points in time where like a trend tries to emerge, and you'll see this happen often where the trend tries to emerge, and then it just kind of gets stifled and shut back down, and then it just kind of falls apart again. So that's another thing you should pay attention to when you're studying these big moving stocks, is what are some characteristics of these false positives where it looks like it's emerging and then it just kind of, it doesn't really do anything. And often what you'll see is like after that initial demand, it just kind of like goes away. Whereas in these prior runs, the demand is pretty persistent for week after week after week. Whereas this, it just peters out almost as soon as it starts. Same thing with here. You can see the moving averages start sloping up. It looks like it's starting to build out some sort of uptrend, and then it just kind of rolls over and dies. And then more recently, this is from 2021. You can see that these power trend areas, if you study them, it's a very great way to kind of identify what a stock looks like on its way up. And again, the characteristics are an upsloping 10 and 20. You have these kind of bounces off of the 10-period moving average. And then, this one here, this was a deeper kind of correction, and then it kind of starts working its way higher again. So like a stock can have multiple bursts and multiple uptrends, followed by these kind of multi-month sort of corrections. And this is where you get into like the cup and handles and some of these longer term bases, is when you get into these deeper corrections. Whereas these other ones, they'll be more like really short term cup and handles, or they'll be kind of flat base looking structures. So that's MOS. If we go to First Solar, that's also in the book here. And again, like this, so last year this thing had a pretty nice rally. And again, if you study the characteristics, it's got a nice power trend sort of look to it with the ADX upsloping moving averages. It pulls back to these moving averages, and you can also see another characteristic of these volume spikes, where when it does have these up weeks, you have these nice spikes in volume. And again, it's when this thing kind of goes sideways, which would be like a stage 3 sort of base if you follow Weinstein's methodology. Once it gets into a stage 3, this momentum that was there, it kind of disappears, and then it just kind of rolls over and just it loses the demand that was pushing it up. But if we go back to this period of time here in 2007, here's another power trend from 2020. Another power trend. So First Solar is a really good stock as far as like, it looks like every couple of years, it gives at least a few months of like, decent sort of movement to it. But if we go back to this power trend area, so, I was actually, I traded this thing back in 2007, a long time ago. But, this is the same period of time in the book here. And again, same characteristics. You see this very, very strong power uptrend on the ADX. And what causes this sort of look on the ADX is just the way the ADX and the DIs are calculated. So if you have these bars that are up, if you have multiple up bars in a row, there's not a lot of overlap on those bars. So the less that the bars overlap on the way up, the stronger it actually drives this higher. And then once you start getting this kind of overlapping sloppiness, that's what actually pulls these things back. But as long as the downward pressure and downward selling isn't very strong, then this red line here will kind of stay muted. So even though there are pullbacks within this bigger structure of the green above the red, these pullbacks are going to be there. The key is that demand is kind of like not overtaken by the red just kind of starting to take over, because if there's multiple down bars and like the majority of the price action is happening to the downside, that's when this red will start slowly overtaking the green. But you can see during this big power uptrend, there's lots of areas where you have these pauses and then breakout, pause, breakout, pause, breakout, pause, breakout. And that's another great thing to look for, is not just looking for these power trend sort of looks and setups, but understanding like, okay, within the context of this power trend, what am I looking for as far as getting into this trend? Because ultimately what you're trying to do is identify these trends early, these power trends early in their early stages, and then you find some sort of tactic to get on board. So you're basically just trying to jump on the train as it's leaving the station. And that's what a lot of the patterns that we trade come from, whether it's flags or cup and handles or VCPs or like any of these base structures that we trade from. The whole intent of them it's not about the pattern itself. All the pattern is there for is to give you a mechanism, a low risk uh, entry point to get on board of a powerful trend already. A lot of folks, they really focus on the pattern itself without actually realizing that the pattern only matters in the context of a powerful trend. If the stock has no reason to go up, if it doesn't have strong fundamentals, if it's not being driven higher by just this constant demand, the pattern is kind of meaningless. The pattern is literally just a mechanism to give you a favorable risk reward within the context of an already existing trend. And I kind of try to highlight that in my slides. And this is just an example that I use: highest momentum, highest ADR. There's other ways to describe this, but you're looking for stocks that have a lot of potential, whether it's fundamental, it's news driven, it's got high relative strength, high momentum, high ADR, like all of those characteristics. It's linear trends. Those are the things are like the baseline pool of stocks that you're basically looking for. And only then within those pool of stocks do you start looking for the setup. That's the right order to put things in, because to look for the setup first, it kind of puts the cart before the horse, because then you'll just end up in kind of do nothing stocks and then wonder why you're never in really big winning moves. All right, so yeah, that's First Solar. Again, if you just scroll through, you can see these periods of time where it tries to do something and then just can't muster enough, and like this could be due to the market at the time. It could be due to this industry group. Maybe, these energy type of names were not really doing so hot, because that's another thing that kind of matters is these things get pushed to these massive heights whenever there's a theme, usually an economic or fundamental theme that's like pushing this group higher. And I don't short, but you can also do the same sort of thing on the downside. So after these trends, kind of like these power trends, go the other way, oftentimes they'll have very powerful downtrends, and it's kind of the same concept. You have this strong ADX reading above 25, but then now you have the red over the green. That's kind of the difference. This is a power trend to the downside, whereas this is a power trend to the upside. And you can see how this cycle ebbs and flows. And the ADX, it's not perfect, but it does a really good job of identifying and kind of keeping you on the right side of the trend. Because if the stock is doing this, like, you don't want to be trying to buy that thing at all. And just like if the stock is doing this, you don't want to be shorting it, because then you're basically fighting a powerful trend. All right, so another thing I want to kind of point out is, as you're looking at these power trends, another thing that I also find to be helpful is I like to mark up the weekly chart. So what I do is I find these areas of pause and I find these areas of consolidation, and I see where they break out or have attempted to break out. So like there was a pause week and then it breaks out. There's a pause week and then it kind of breaks out. This is like a gap that kind of failed. This could have been some sort of area where like there was a pause week or two or three, and then it tries to break out, and you can see that it reverses. So I'm just generically marking up these charts because, and I'll show you why here soon. I'm looking at these breakout points. So I just take as long as it's in the power trend here, I'm just marking up the chart on areas of, like, if I was looking at this thing on a daily, it might have been something that got me into the trade. And then at some point, the power trend kind of dies and it's over with. Let's say maybe this was the last stand before it kind of rolls over, and then it doesn't do a whole lot after that. So once I've generically marked the chart up, I then move to the daily, and I'll show you why here in a second. So I go to these areas where I just marked up the chart with the arrows, and then so one of the things that, is great about doing this over and over and over again is you start to learn what a proper breakout structure looks like. And like when you go from the weekly to the daily, these arrows aren't exactly in the right spot, but you can kind of see where you might have been looking at that time. So I just kind of adjust them back to where they were likely supposed to be. But anyway, the first buy point was here. And then what I do is I just study the price action around those notional buy points. And like most of the setups that I trade are because of me doing this over and over and over again, and also realizing that it's consistent with what most other traders do. Like if you study a lot of the top traders and their methodologies, they align with what I'm doing here. Whether it's Christian's flag breakouts or whether it's Dr. Schaap with his 80 Express and 80 Extender. But it's another reason I color my bars, because I want to look and find where so I use white for areas that are narrow range bars, and I use purple for ones that are like an above average range bar. And what I noticed time and time again is, as I was studying these sort of breakout points, what I found most often to be the case was you would have several of these white contraction bars, and you would have this kind of sideways price action, and then you would have a breakout above this resistance. So when Christian talks about like flag breakouts and things of that nature, like this is what that is talking about. And you have a very powerful volume thrust up, you have a low volume pullback, and then you have a breakout that kind of pushes that stock back into an uptrend. Then you go sideways again, and you can see these white bars. There's like contracted price range, and then you have a breakout on a purple candle. And this wasn't a purple candle here, but I imagine at one point during the day it was purple, and then it kind of closed lower. But this thing has a little bit higher volume, and it kind of pushed out of this range. Same thing here. It has a range, and it pushed out on higher volume. And you could argue that even this here, there was a range, sideways range. It pushes out on higher volume and range expansion. You might even argue that, like maybe that might have sucked you in, but like the volume isn't very high on that, so I couldn't imagine that would be the case. And again, as I'm studying, I just kind of like look at the arrows. I look at where the weekly buy points were. And even here, like I'm almost doubtful that I would have bought that, because the volume it's there, but it's like it's just barely there. Like I would imagine that the volume buzz on the day was maybe 100% or less. So yeah, it did break out, but like these are the kind of contexts where it's like it's breaking out, but it's like there's not a lot of conviction there. Same thing here. Like you could argue when this thing wedge pops out of this formation here off the 50-day, it's like you might have gotten in here on a wedge pop sort of formation, and then maybe that would be an add point. But you can see the volume and the price expands pretty nicely as it breaks out of this base. And again, like on the weekly chart, all of these minor little small micro bases, like these are not always going to be evident on a weekly. Some of these longer ones, if they're multi-week consolidations, they're going to be pretty evident on a weekly. In Christian's rule of thumb is 2 weeks to 2 months is kind of like his flag breakout rule of thumb for a base length. But you can see, again, it's the same pattern of sideways consolidation, expansion up, sideways consolidation, and this is where it starts to get a little sloppy. It rolls over. Again, the volume here is not that great. This volume is decent. So you might have gotten sucked in on that day. This thing chops along, and then again, here's another breakout point from the weekly analysis. It doesn't run very far, but like you could have got a decent entry and maybe could have gotten a partial profit off of this. Same thing, we're using the weekly breakouts. This looks like a gap up, so maybe this was some sort of EP or earnings sort of event. Would have been a great breakout from this little base. This was probably, excuse me. This is probably the bar that would have been the trigger, but it's kind of the same theme where you have again, we started with the weekly. We took this power trend and we just started analyzing. We marked up the chart. We started putting our, overlaying our buy points. And, and if you look at the weekly, like this is where these buy points would have lined up. And then, eventually, let's say this was another gap you took. That one looks a little sloppy formation-wise, but it had really strong volume. So you might have got something out of this. And then this would have been the last sort of buy point potentially, but like you can see the volume down here is really, really low. So some of these buy points, it's like I wouldn't even imagine I would buy them because the volume is so tepid. And even this, I mean, this looks like a decent sort of VCP breakout, but the volume is just not there. So some of these situations, I can't imagine I would have even bought them, even if they had come through my my scans. Just because that's another level of discretion that I use, is I try to look for things that are having very strong price and volume expansion. So that's First Solar. So this is how I would go about looking at and analyzing charts and marking them up. And you can even take something like Kulamagi's. Kulamagi has a bunch of recent examples. If you go to this website here, this individual, Harris D, he basically took and summarized and took notes on Kulamagi's swing trading school. So it's a 4-hour swing trading school video on YouTube, but these are basically the notes that came from that. So another thing you could do is kind of take the trades that Kulamagi took. Carvana was one. And actually Carvana was actually very recent. So again, like do the same thing. You take this power trend zone on the weekly and you start marking up the chart. You have a consolidation and a breakout. You have a consolidation and a breakout. You have this kind of consolidation here. Maybe this first breakout, but again, this is kind of getting extended. This is the third leg up and extended, so it's like taking these short bases off of like an extended setup is very low odds anyway. So I wouldn't recommend doing that as a business practice. So I'm just going through, marking up the chart, and just marking up the weekly breakout zones. Maybe this consolidation here would be another one. And you can see, like, we're still kind of in the middle of building some stuff. So, like, there's actually a potential that Carvana could break out from here, just based on the fact that it's still in a power trend. And there's still potential that it could keep on going. So we just go back through our daily. And you can see you have to kind of adjust the arrows here. But, that would have been a solid buy point. I think, actually, Christian was buying here. I bought here, but true to form, I didn't actually ride the entire move. I think I sold some or most of it after 3 to 5 days and then kind of missed the rest of the bulk of this trend. Definitely something I'm working on. But again, look at the theme. Tight price bars, expansion, breakout. Tight price bars, expansion, breakout. Tight price bars. And this one doesn't actually, if you look at the volume here, like this one doesn't really expand out. So that one I would just kind of throw out because it wasn't really an expansion in price or volume. And then here you see the purple bars. You didn't get like the nice tightness of this price action here, but it's pulling into the 50-period moving average, and it's kind of doing like a Kell wedge pop back up through the 10-20, and on an expansion of price action. There's maybe potential that that one might have gotten you sucked into it or something, but you're not going to win every trade. That's just not how trading works. It's about identifying high probability situations that are going to help follow through, and that's why you need to pick power trends. You need to find stocks that are actively and powerfully moving to the upside, because those are the stocks that are going to follow through the strongest. It's not about your batting average. I want to drill it in your head. It's not about your batting average. It's about your ability to find stocks that make big moves and can run for days and weeks after you enter, because that's where you're going to make your money. So get out of your head that batting average is where it's at. Kulamagi talks about a 20 to 30% batting average most of the time. Mine ranges between 30 and 60% depending on the market environment. Mainly not because I do something better than Kulamagi. It's just I actually use a slightly wider stop, so I end up finding myself getting stopped out less, whereas he uses very tight stops. So that's kind of the difference of that's why his batting average tends to be lower, um, because he uses uber tight stops. So again, we just keep marking this chart up. This might have been something that sucked you in, but again, the volume is kind of really low. But what I want you to pay attention to is kind of the theme of how the price action looks, the structure looks, what these breakouts look like. There's a consistent theme, and this is why Kulamagi always talks about higher lows, surfing the moving average. It builds a range, it breaks out of the range. It builds a range, it breaks out of the range. It builds a range, it breaks out of the range. I mean, this is the theme over and over and over and over again. And this wasn't even really like a good range, so you probably shouldn't have taken that one anyway. But it builds a nice tight range, it breaks out of it. Builds a tight range, breaks out of it. I mean, this is how you study stocks. And this is how you understand how stocks move. And this is what gives you the conviction to step up to the plate whenever these things do break out, and you have the kind of the market wind at your back. This is how you build conviction. Building conviction isn't about being stupid. It's about trusting that the phenomenon that you're exploiting is repeatable, and that you can rely on it to give you the expectancy that you're looking for over a series of trades. I think a lot of people are not confident in their trading because they don't have confidence that the phenomenon that they're exploiting is actually something that's repeatable and consistent. But if you do this process here that I'm showing you, you'll find again and again and again and again, and this is why I trade the way I do, not because Kulamagi said to, or not because Minervini told me to. All these guys, they're amazing traders, and they are a great starting point to learn about trading and to learn about, it cuts your learning curve in half. But the key is you have to take their concepts and not just take them at face value, but you have to understand why they trade like they do. The key is to understand why does Kulamagi trade the way that he does? Why does he say that you need a range and it needs to break out? Because he did the same thing I'm doing here. He might have done it slightly differently, but he talks about this, building a database, studying past movers. And he even says you can invent your own setups. It's not about following someone's setup just because they said so. As you do this study, you're going to learn variations of setups. You're going to learn setups that Kulamagi might not have talked about, or maybe when he did his study, it wasn't something that he picked up on. But the reason traders trade the way they do, the way Minervini trades the way he does, the reason he does is because he studied stocks and he studied them intently, and like his VCP pattern, he started to realize it's just a function of supply and demand. And the same thing, when you study these power trends, there's only so much the stock can do in a power trend. If a stock that is under strong accumulation is going to have lots of these pause areas, there's going to be lots of upward expansion bars. There's going to be lots of strong volume. There's going to be higher lows all the way up. Those are just characteristics of a stock that's under demand, which that's what creates a power trend to begin with. The stock is under extreme demand that's outstripping the supply. And so again, if you just understand what the characteristics of an uptrend and a stock in strong demand looks like, then you're not going to hesitate to pull the trigger whenever you see these things happen in your real time. So this was just a quick video explaining how I go about studying the market, how I go about studying stocks, and whether it's Kulamagi or whether it's Minervini or whether it's O'Neill, take the resources they provided you in the powerful model stocks that they've shown you and go back and do the same thing. And even if you can't find those stocks, you can find your own. I can take you can take just about any stock in the market and kind of do the same thing. This one doesn't have any power trends just about any time in the recent past. There was this short blip here, but again, upsloping 10 and 20, you got tight weeks, and then after that pattern stops, it just kind of falls apart. This is another really strong, powerful uptrend, and Cura. But same thing, like, this would be the exact same process. And this is a very recent stock here. You start marking up these pause weeks. And this is doing this analysis every weekend is a great way to like find these pause weeks. So like one of the things that I would highly recommend is if you don't know where to start on the weekend, just find stocks that are in this situation here where they're in the beginning stages of a power trend and they might be having a week or 2 or 3 pause, and you'll see that with the DI will start to slope down, because that means that, like I said, the overlapping of the bars is starting to increase, which causes this to pull back. But it's within the context of a powerful up move. So like you find these pause bars and you just start marking them up. And again, like, so where was that? I lost my bar. And it's not going to be perfect. Like this ended up being a gap. Like on the weekly chart, you're not going to see that. And again, there might have been some other areas down here where you might have been able to get on board. And that's one of the reasons I trade the 80 Express pattern, because it's a shorter pattern. That's the same concept. It's a powerful uptrend on the daily, and then there's these short kind of muted pauses on the way up from the green. So like these 2 to 3 to 4 day pause areas, these are going to come out in my 80 Express scan. And essentially, an 80 Express on the weekly is going to give you pause weeks. So an 80 Express on the weekly is typically going to be an AD extender on the daily. So like you see how this slopes down, that's an AD extender. The green's above red, and this is sloping down while it's over 25. And again, this one just happened to gap, so that, this may not be the greatest example. But, like again, OSCR, you see the power trend here that kicked off, when this price expanded off the bottom. So like this first leg up is usually what kicks this thing green over red. Like that's this up leg, and this is exactly what Kulamagi talks about, is this leg up is what you're looking for initially, because this is the first burst off the bottom usually, and it's kind of what kickstarts the trend. You just take these breakouts, and if you just look at the highs of the weekly bars, just find where a weekly high was broken. There's one there, one there. Just look for weekly high breakouts. And again, this is just we're initially marking up the chart on the weekly. We go to the daily and just see what it's showing us. Again, this is like a Kulamagi flag breakout, building higher lows. It's surfing the 20. It's getting tight, and then it breaks out. This one here is a little bit sloppier, so you can see. I don't know if there was some news event or something that came out here, but you can see this thing got extremely sloppy during this period of time. So the key takeaways: look for power trends, understand the characteristics of power trends. Again, the characteristics are upsloping 10-20. You have these big purple, basically these are accumulation bars where, the demand is just completely outstripping the supply and driving the price higher. You have these really tight weeks of price action. And like if it's a down week, it's usually going to be like a very narrow sort of week, or it's going to close in the upper part of the range. Like all these are just signs of demand. So yes, it is a down bar, but like you can see that it's a very tight range, and there's not a lot of distribution going on. It pops up again on a purple bar, 2 days of tight range. Pops up on a purple bar, 1 day of tight range, or 1 week of tight range. And you can see this pattern just happens over and over and over again. Then you go back to the daily, and it's the same pattern over and over and over again. This is why breakouts are what Kulamagi recommends, because I'm sure he's had the same observation that I've had. He had it, Minervini had it. Like all of these guys, they have the same observation, because this is just how price moves in stocks that are moving up powerfully under strong demand. So again, just go through price action, understand what a good strong trend looks like. Here's another example. You can see the pause weeks, and this is a good way to build a watch list too. Like if you do this on the weekend, and you just kind of isolate these stocks that are having a 1, 2, 3 week pause within the context of a strong upsloping 10-20, or you can use the the ADX Powertrend methodology. Either way, that'll help you build a nice structured watch list, and it'll help you kind of isolate the things that are actually moving now and stay away from like crap like this where it's just kind of bleeding out. Like these are stocks that you should be nowhere near. Like this is just a drain on your time and your portfolio. You want to be in things that are actively moving right now. So I hope this helps. This is just how I study the market. I spend some time, usually each week, just reviewing some of the biggest movers. I want to constantly drill this into my head. I want to constantly reinforce what good, strong price action looks like. It helps me build confidence in my setups. It helps gives me conviction when it comes time to step up to the plate and buy, because when you look at this enough, you start to understand like that's just how price moves. And if you do this in the context of a good market backdrop, then you're going to get nice follow through. If there's a group theme there, if there's good market context, or maybe sometimes there's just a sector theme, or like maybe right now, like the large caps are moving strongly and a lot of other things aren't. But this is another good way to isolate themes. So like if you come across a bunch of stocks from the same sector or the same group or the same sort of theme, that just kind of should build conviction in your theme that this is where the money flow is going. This is where the institutions are piling in and placing their money. So let me know if you have any questions, or let me know if you found this to be helpful. I'll talk to you guys soon.